Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 24th, 2020. It's just after 11 o'clock Eastern Time as I'm starting this video. And what I'd like to do is roll through most of the trade ideas and different asset classes we've been looking at lately. I often preach the benefits of, being diversified when you trade or investing. It's just as important, in my opinion, in your trading as it is in your longer term investing. And by diversification, it doesn't mean own 5 or 6 or 10 different ETFs or mutual funds or stocks. That is part of it, but however, if you own, for example, in your 401k or investing account, S&P 500 index funds, whether they're mutual funds or SPY, you own QQQ and you own Apple and Facebook, let's say, and really all stocks, you're not diversified because those Facebook and Apple are top components of the NASDAQ 100. They're top components of the S&P 500, and you have a lot of overlap between those two sectors, such QQQ, the NASDAQ 100, and S&P 500. So proper diversification starts with asset allocation. Those are your different asset classes. We're going to go through these in this video. That's stocks, equities are one class. Bonds are another asset class, gold and precious metals, commodities. So we're going to hit on a little of those, each of those today, and I'll try to go through in this order. I'll start out here with a quick update on the stock market. A quick overview on gold and palladium because I put out a post today, an extensive analysis on gold and the US dollar, so you can check that out on the front page if you're a subscriber. I'll touch on crude oil, natural gas, Bitcoin. I haven't updated that in a while. I meant to cover that in the yesterday's video, and I forgot to do so, or I didn't have time to get to it. MJ, marijuana stocks, lithium stocks, and then TLT or treasury bonds. We'll wrap up there. And that's pretty, I think, of course, it's not an all-inclusive video, but it hits on a lot of those major asset classes and, again, some of the trade ideas we've been looking at lately. Starting out with the broad market, again, nothing new to report. We're still working our way up within a price channel on QQQ. This is one of the two 60-minute charts I've been sharing. It's a little clean version, just showing you bouncing within here. We're starting to where we had the upper channel line was right here. I have another board with a midpoint line, but that I'm not using that one right now. This one's showing you we're starting to compress. Prices are compressing a little more. We're not running to the top of that channel, at least the way it's drawn on this board here. I did have a different variation of this chart, and I'll get to NQ in a second. And that's it. So we continue. We had a divergent high right here, negative divergence, and as we do now, as we inch on up, made a new marginal new high today. And again, no sell signals, and as I said, I don't expect any big fireworks, although anything is possible. Be on the lookout for it. A solid break down below this level, but I think the market will probably, like I said before, go into a holding pattern until next week, starting with really probably kick off Tuesday night when Apple reports, and then so really by Wednesday, I think we'll start to see which direction this market wants to take. All right, so I wanted to update one thing here. In yesterday's video, I went through the top components, or actually all of the components, I should say, of the NASDAQ 100 that were scheduled to report yesterday. A couple of those reported early before the market opened, but the bulk of these reported after the market closed. So let's see how we're doing here. These are those stocks right here. We had 5 of them, and you can see there's the earnings date right here, January 23rd. I went through there and I told you if a chart was clearly bullish or clearly bearish, that is usually the way they go after earnings. And if the chart is ambiguous or I don't have a good read on it, like AAL, for example, American Airlines is in a symmetrical triangle pattern, it's a crapshoot. Well, they are down, and I wanted to just point that out. Comcast CMCSA was clearly bearish, in my opinion, in that video, based on the analysis of the chart, and you can see it's down pretty good today. Skyworks as well, down 4.26%. Intel's the only one bucking the trend. It had a bearish chart, in my opinion. It's up today. The day isn't over, but it would take one heck of a fade. So we'll see how they close today and how they follow through next week. So far, that one there was wrong on expecting a down, reaction after earnings. ISRG, clearly bearish chart, clearly down today, 4%. And again, AALL, again, that one was, like I said, ambiguous. I didn't have much of a read on the chart because it's in that symmetrical triangle pattern, but it is down today. So the point being, 4 out of the 5, or 80% of those stocks, are trading down today following earnings. And again, these were all the stocks in the NASDAQ 100 that reported yesterday. The only one that really has much of an impact, or a big impact on the index, or not big, but a decent impact, I should say, is Intel. It's larger market cap than these other ones here, but Comcast is pretty much up there too as far as weightings go. And again, it just kind of shows you what's happening so far. And again, we're early into earnings season. We'll know once those big FANG stocks report, we'll have a better idea which way the market goes. Because if you see a lot of this, if you see a lot of post-earnings selling, that's not a good sign. So let's see what happens next week. I just wanted to give you guys a quick update there. All right, NASDAQ 100, NQ. Same story. We're zoomed in a little bit here on the 60-minute chart, but it's the same one I've been showing for a while, this uptrend line. We continue to walk up there. We have a price channel formed. Here's your uppermost line there. And like I showed you on QQQ, where we were hitting the top of the price channel before, so far, this is the first time, I believe, that we've crossed the midpoint line right here. And didn't run up to the top before reversing. You can see we stopped shy of the top, and that gave us another divergent high. It simply extended these divergences that were already in place before at the previous high, and we've rolled back down below that midpoint line. So like I said, I take everything that happens really today and early next week with a little grain of salt, because you have the big companies reporting. You're probably going to see whipsaws and some volatility as traders square away their positions before earnings. But so let's not read too much into what's happening today. Again, the most important thing will come if and when we break the channel. There's some minor support there about 92.06, and of course the bottom of the price channel. And your first support after that is about 91.11 or so, and then you can see the additional targets and my target zone. Should the market not like what the FANG stocks have to report over the next week or so, that's where I think the market will go down to, at least in the near term. Again, I posted an extensive update on the homepage today with some charts on GLD, the ETF. Here's what the futures look like. I highlighted this breakdown we had the other day, initially indicating that would likely bring us down, and then upon further analysis, as I said yesterday, looking at the charts and more so factoring in, that's sometimes what you have to do, is factor in the trend. The market's been in a resilient trend recently, so a lot of these bearish chart patterns and bearish developments haven't played out. A lot of pullbacks have been bought up at support. And with gold, flip around what I was saying yesterday, gold's in a primary uptrend and recently broke out of that multi-month consolidation range. So therefore, I kind of yesterday, upon further analysis, changed my tune a little bit as far as where those breakdowns might take gold and the other precious metals. This one reversed right when silver hit that support yesterday, where I was looking for the bounce, or was that day before yesterday. And I just want to show you where we're at now. So gold has come back up. After the breakdown, it snapped back up. It's been back testing that same trend line right there from below, and right now it's testing those previous highs, reaction highs. You can see there we have a few reaction highs. It's a little bit above it now, but not enough to say it's a clear breakout yet. See, it broke out and it's come back down there. So I think if gold can power on up through here, take out today's highs, that should be the all clear, because if so, what it will have done is two things, two technically significant events. It will have taken back or regained this trend line right here, move back above it, and foiled the breakdown. And the other thing it would have done is taken out these previous reaction highs right there. And again, so you can visit my the front page post, or we'll look at it here, GLD. There it is right there. Looks like a period of consolidation. And so far, an impulsive move up. We need to really pop those highs with conviction. And, that would open the door to my next. This is a weekly chart I just jumped to. I did not post this on the homepage today, but I posted it many times in the past few months. Leg up, consolidation period within a bull market, breakout, impulsive, everything you want to see. And we got very overbought, especially on the daily time frame. And on this run up right here, and then that would open the door if we can move up here. Next target's 150, 118. These are longer term trend or investment targets, and then 173.87. I didn't update GDX. I say this often. If you traded, follow the site for a while, The miners will follow the metals. It's that simple. There are temporary periods of disconnect where you might see gold rallying and GDX going down, but that's rare. Overlay any chart, go back 10 years plus. If you want to go back as long as you want, use the HUI, it's a gold bugs index, an index of gold stocks. Overlay it with a chart of gold. You can go back decades and you will see there is a unmistakable correlation between gold and the gold mining stocks. The only difference is when gold rallies, the mining stocks will rally as much as gold and then some by a factor of, it's not a set formula, but I've seen them rally twice as much. In other words, gold goes up 10%, the miners can go up 20, and it cuts both ways. So in other words, if I'm bullish on gold, I'm bullish on the miners for the most part, unless there's some short-term developments in the charts that might indicate a pullback in one, a rally in the other. So that's that. Silver should follow suit. Sometimes it lags behind gold, and then it plays a game of catch-up. And the only one I wanted to update as well is palladium. I am still very, very closely watching this one, waiting for the right time to add this as an official short swing trade, and that may come soon. This very, very much looks like an exhaustion, buying climax here. Big volume surge, parabolic run right here. This is a weekly chart, and we'll see what happens over the next week or so. I want to say this, that it would certainly help the case for a short on palladium. We need to see some solid technical evidence because it's in a parabolic, blow off top right now. But the problem with those is they can go a lot longer than you think, or a lot longer than your portfolio will allow as far as losses if you are short too early. Think NASDAQ 2000, the dot-com bubble. Think Bitcoin, things like that. So don't underestimate just how far these extremes can go. We'll wait for some decent sell signals, and then what I was getting at, it would certainly help to see the stock market correct too, because palladium has also been, there's a shortage right now, palladium, but it's also been a play on the economy. It's traded a lot in line with the equity markets, because if the economy's doing good, stock market's doing good. If the economy's doing good, they're selling a lot of cars. They need new cars, new catalytic converters, therefore more demand for palladium, exacerbating the shortage and the problem, causing prices to run up. Stock market corrects, all of a sudden people will start talking, odds for a recession or economic weakness will start to tick up a little bit, and then at least the conventional wisdom will be that's going to be bearish for the auto industry, and hence bearish for palladium if the demand for new cars drops. So that's a weekly chart there. Daily charts right here. There's some levels to watch. Again, we have these, steepening trend lines. It's really a parabolic run. I don't have a parabolic drawing tool on this charting program, or this one I'm using now, the screen draw, so I can just kind of go like this and show you that's what it looks like there. Of course, palladium futures, we want to watch that too. If you trade palladium futures, here's what I have on the 60-minute chart. Here is an uptrend line that looks pretty good. We can certainly use this one, and that's the one I'm looking at. So right about 2300, you can see there I have horizontal support, price support, and I have the trend line support just below. I like to see a setup like this when you have not one but two intersecting support levels, because if you break both of them, that just increases the odds that you're going to get a correction. That's a better sell signal than just breaking one level. So there it is, looking kind of toppy. It looked kind of toppy before, and don't get me wrong, we've had some corrections along the way. It's not as if these divergent highs didn't play out. This one didn't play out for much, a little small one, but this is a pretty big divergence on the RSI, no divergence on the PPO, because again, we've just gone straight up. So big downside. Let me just measure it out for you real quick, where we're at right now, and grab a line. The top of that support zone is about 9.5%. The bottom of that is about 11, so we'll call it about a 10-11% downside to my initial target. And because of the bubble-like nature right now in palladium, when the dam breaks, when it finally breaks and the top is in, my expectation would be a very swift drop. I know the nature of this, commodity, and you can see it there. When the music stops and everyone goes to grab a seat, whoever's left standing gets caught. They're the bag holders. This falls very quick, so you can't. If you wait around too long, you'll probably miss the move. Yes, there's been some breakdowns that I thought we'd have some more downside here. We hit the initial target on this one. I thought that might be the top. Obviously didn't prove to be, but sooner or later we'll get that. And again, if you look at that next target zone down there, that's about a 17% drop. And so a lot of downside potential there. And I wanted to share one more chart on gold and palladium. There was a question on the site. I was out Tuesday all day, got back in very late. I was away from my desk all day. Started to reply to a question on the site. It was in the comment section. I'm trying to recall who that was from. But the question was, Randy, do you think, if platinum corrects, does that mean gold's likely to go down? It's a very, very excellent question, because gold and platinum, they're precious metals. They have both, industrial applications as well as precious metals. They're in that group of precious metals, so they tend to trade together. And you can see here, this is a long-term chart. We're going back into the late 90s here, 1999 or so. And what I wanted to point out is, first of all, there's usually a positive correlation. That means one is moving up and the other is moving up at the same time. They're usually, the trends are in line. However, there are periods of disconnects, and there's a couple things that stand out on this chart which lead me to believe that palladium can have a substantial correction, and while gold can go up. Because as you know from my update on gold today, I'm still, and have been for a while, longer term bullish. I kind of recently kind of flop back to intermediate term and near term bullish. If we can get a little more upside on gold, as I just covered, then I think we could see the next leg up start soon. That's very possible. Especially, keep in mind, especially if the market doesn't like what the FANGs have to say next week when they report. Keep in mind that will most likely cause a flight to safety bid into gold if the stock market corrects. So what I want to point out here, well, you can see there's just a couple instances here where, let's look at palladium first. Palladium is in clearly a parabolic advance right now. This is a parabolic trend line, when you don't have a straight trend line, and you can see it's gone completely. This is the most parabolic run we've ever had, going back at least, we're covering 2 decades here. We had a couple others here back in the 90s, around the time the dot-com bubble and all that. Late 90s, we had a parabolic advance, and what happened is, after that, palladium collapsed. I'd have to enter a annotation drawing mode to give you that, but I believe that was like an 80-something% drop. It was a huge drop in palladium. Yet at the same time, you can see right here, gold rallied. They went in completely different directions, and again, that was after a parabolic advance. So you can see what I've showed you. All these dotted lines right here, the dashed lines, are peaks in gold. Or palladium right there, and you can see for the most part they traded together. So when gold corrected, palladium corrected, because they were in a normal trend. So what happens is, every now and then, for whatever reason, supply and demand forces, palladium or gold, but in this case palladium more often, is in a parabolic run, bubble type mode, and then after that it doesn't end well. I say that very often, whether it's an individual stock, a commodity. It's been my experience over the years, over the decades, parabolic runs rarely ever end well. They don't just, after a parabolic run, think Bitcoin, usually don't just correct normally. It's boom, the initial leg down is big, or the following fall is pretty big. So there it is. You can see the my comparison here, and it does show you that in some instances it is very possible, and we've seen it before, that gold can rally after a palladium finally ends a parabolic run. Palladium can correct substantially, and gold can continue to go up. Eventually, gold did start to reverse and go down, but then again, they were palladium again was doing its own thing before that, and so when palladium finally topped, gold continued to rise. Then palladium bottomed and actually went up. So there's an inverse correlation. So that's it. I'm just trying to drive home the point that this is possible along with this. Doesn't mean it must happen, but very much a possibility. So hopefully that answers the question. Hey Randy, can palladium crashes or goes down hard, is it possible that gold's going to still rally? And that answer is yes. Crude oil, wow, just and this is also a red flag for the market. You don't see this often. Crude oil and the stock market have traded highly correlated for months now, and usually they do. There are times of disconnects, but we stepped in here or just above that trend line. Crude tried to take it back. We got stopped out of the official trade. I mentioned it yesterday as a long off that 55-ish support, and it did bounce and started to look good. We had divergence there, but look, boom, fell right down through there. Just horrible price action, and nothing to say about it. We're below support right now, so that's definitely bearish when the 55 level was taken out impulsively today. If it snaps back, great. The divergence is still intact, at least as of now, but we've made a bearish cross back on the PPO, and we may go in, extend the divergent low, and we're still very overbought or oversold. I'm sorry, but again, oversold can become more oversold, and sometimes you get the little bounce after the oversold reading, which we did, worked off the oversold conditions, but then boom, we're heading down again. So really, I don't see a reason to be long crude right now. I'll keep an eye on it, but it's right now the price action just very, very poor. Here's nat gas. I don't have much of an opinion. Every now and then my annotations disappear on this charting platform. I'll use the continuous contract. I don't know if it's when they roll or what, but every so often when I log in here, the trend lines are gone. Doesn't matter. It's probably good. Every now and then I need to clean up a chart, add new lines. I don't have a strong opinion right now on natural gas. I can tell you there's resistance right there, about 195 or so. Right there, it needs to pop. Sort of support, not super well defined there. It seems like it's washed out for now, but I can't make a case to be long, nor would I ever short it this oversold and with potential divergences. If it takes another thrust down, it'll continue to extend. There's plenty of room for another leg down to keep these divergences intact. So if I had to be long or short right now, I'd be long, but I don't force trades. So let's just keep an eye on it. Wait for the next clearly bullish or bearish setup in natural gas, and as well as an objective entry. I don't see that right now. Okay, and I wanted to update Bitcoin. We still have an active long trade on that, as well as some, Bitcoin, what I call Bitcoin proxy trades. I'll go over those real quick. We had a correction. There was a divergent high recently after that nice rally. We hit, I think, was it our first target in the GBTC trade, and then we put in a divergent high, and we've corrected. And so far, it's still a fairly constructive chart. I mean, Bitcoin is in an uptrend. That you cannot argue. You might be bullish, you might be bearish, but you cannot say that it's not in an uptrend. An uptrend on a security is simply defined as a security making a series of higher lows and higher highs. So the uptrend still very much intact. We had, nothing goes up forever. We had a divergent high. We were overbought. Those divergences played out for correction. Hit that 82.19 support. Was it just earlier today or yesterday? And put in a small divergent low right here. Positive divergence, and it's been rallying, coming up to resistance now. The way this works is, the uptrend's intact. I'm still bullish and long Bitcoin, and it's still an active trade on the site. It needs to take out that 85.50-ish level with conviction. If it does that, you want to see this level get taken out. These are your resistance levels overhead, and if and as each one is taken out, those are additional buy signals or help to firm up the bullish case. So we really want to see this lower low hold. The previous major reaction low is right there. So technically you could go all the way down. You could go down a little more and still keep that uptrend intact. But the sooner they buy it up and take it out, and especially take out that previous high, the better. It just keeps keeps the trend intact, and it shows you there's a lot of demand right now for Bitcoin. So this is Bitcoin futures right there. Could probably draw a downtrend line, but I might be forcing it. There's not a lot of reactions, but we'll just put one there, show you it's a little pattern here. So maybe another leg down. We're at dual resistance levels now, and like gold, it should help this trade if the stock market corrects over the next week or so. That should give a tailwind to a long trade on Bitcoin. We'll look at the official proxy, which is GBTC. Since I know a lot of you out there probably don't trade futures. GBTC, let's get to this board, put on these lines. That's it, and we hit our first target very quickly on that. Came just shy of our second target. and then reverse there. So you can see we're still well above the stop. We're even above entry, so we're still profitable on this one. And like I said, I put a little higher. I do put a higher weighting on Bitcoin futures because they're going to do a little bit better job of tracking the price of Bitcoin. This is a proxy that holds it, but this is like an ETF, but it can trade at a discount or a premium to the price of Bitcoin, GBTC. That's our official long. And then we have a long trade on Riot. I may have based this one off the daily chart. Yes, I did. We hit our first target already pretty quickly. We consolidated under there. Each target is a resistance level where I think a reaction is likely. So we bounced between that 130, which I think was the breakout point. I mean, the story on this one, if you're not following the trade, not in it, we broke out of the downtrend line, impulsive breakout. Then we took out the 130 level, which was an important level, and rallied up there, hit the first target, bounced around between the 150 and the 130 support level, and we're right around there now, a little below it. I'm not crazy about that, but the fate of this trade will most likely depend on where Bitcoin goes. So Bitcoin can rally, and I just gave you my thoughts, things to look for. Then this one should continue up. Ideally, it should hold support here, but if it goes a little lower and Bitcoin reverses and starts to rally, then this one will probably follow. Next target remains 174, and this is still a potential target. If I like what I see going forward, I may add a third target there around that 245-ish level. That's an official trade, but again, official, unofficial, it's just a matter of getting these out there. I liked Overstock as well. Don't think I added that as an official trade. It's unofficial, but it hit the first target at 915. It's pulled back. Here's a little uptrend line to watch right here. And again, the fate of Overstock will most likely depend on what Bitcoin does. Second target's there at 1190. And let's just keep an eye on these guys, see if they reverse. And the other one was MGI, MoneyGram International. Breakout, wasn't very impulsive until right here, went up, took out that 253 target / resistance level, and has been testing that level every day since. Look at that, each and every candle. Well, that one's a little higher, right, holding that 253 support. So ideally, again, and the fate of this one might hinge on what Bitcoin does, but ideally you want to see it hold that 250-ish level. And if so, and we can get another leg up, which I'm favoring, next target there is 322. So yes, it is objective to go long here with a stop somewhat below. I would feel a little more confident. Might add this as an official trade if I saw a little bit more bullish developments in Bitcoin right now. So I'll just keep this one unofficial for now. If you're in it or you want to be in it, objective around 253 with a stop somewhat below. But if you want to put the odds in your favor, you wait to see some more upside in those other stocks that I just mentioned, as well as Bitcoin. And if that one's still around here, you could jump in. And or break above the recent highs. You can look here; it's just consolidating in this little range. So if it can pop those recent highs, that also could open the door for a move up to 322, and that'd be a pretty nice gain if it got there. We're at 253 now. If I can grab, or 253 right there. Move up to 322. You might want to put your sell limit order a little shy of that, maybe around 315 or so. It'd be about a 25% rally, and if it gets up to this target here, you're talking about a 58% rally or so, 60%. Okay, MJ, pot stocks are kind of stalling out. They had a healthy run. They got overbought. I've covered these recently in recent videos. Their breakout level on MJ, I'll just hit on the ETF now. The video will go too long if I go over each individual pot stock that I've highlighted recently. But so far, so good. And yeah, that's it. A lot of these stocks were overbought, pulling back. They're still above support, and we could easily get another leg up here. You might want to wait and see some signs that the next wave has started before stepping in. And again, maybe I'll follow up in a separate video or put some charts up to update those individual picks that I had in the sector. But as of now, the bullish case is still intact. We broke out, back tested, had an impulsive leg up, and appear to be in a corrective wave, and may soon have the next leg up there. It would certainly help to see the stock market continue to rally, because that keeps the risk on trade going. If the stock market doesn't like what the FANGs have to say next week, you're going to have a risk-off environment where gold should do well, treasury bonds, Bitcoin, things like that, and then these what I'll call junk stocks or crap stocks. No offense. They're just they don't have proven business models and long-term track records. A lot of these are not well capitalized, and so those tend to not do well in a risk-off environment. So you just have to make that keep that as a consideration, and like everything else, if you're in them, don't let the trade get away from you. If it starts to go against you, that's what stops are for. All right, lithium, very overbought. It's consolidating. Not much to say about that. Also, good time. If you've been in any of the individual stocks or the ETF, not a bad time to set some raise your stops. The next support, I could easily see this one pulling back to back test that 29ish level there before heading higher, and even quite possibly this downtrend or uptrend line. We haven't visited that uptrend line in a while. We had reactions along the way here, and when you get pretty far away from an uptrend line like this, sooner or later you come and visit that trend line. So we may be looking at some more downside here. I certainly wouldn't be chasing those stocks at this point in time. We've had some tremendous gains on a lot of those individual names that were very overbought. Yes, we're a little shy of that level, and we may get there. And that would certainly be an objective level to book some profits. If you haven't done so yet, if around that 30, a little below 30.70, maybe step in, sell around 30.62, 65, somewhere around there. If it gets there, I'd be more concerned about protecting profits now, especially if the market corrects next week. You probably see money come out of these guys as well. And last but not least, Treasury bonds. So we're seeing a pretty good lift in Treasury bonds. Is this those in the know, the smart money, this rally in Treasury, saying they don't think things are going to go so well next week when the big FANG stocks report? Remember, Treasuries are a risk-off asset, and it's also an area that typically institutions, smart money trade. How many of you have bought individual Treasury bonds? You might have a mutual fund that has bonds in it, but it's usually the institutions and very high net worth individuals that will purchase Treasury bonds. And you can see this is a 30-year bond future. So we've been in a pretty good uptrend here. Now there's a lot of resistance. Overall, Treasuries have been correcting for months now. They've had a heck of a run up earlier in the year, but what's happened recently, we've had this trend line. We had a breakdown, but it proved to be a false breakdown. That's a bear trap right there. It's a false sell signal, and then boom. Whoever shorted that, they turned around and roasted the shorts. As I often say, fewer things in trading and investing are more bearish than a failed, or more bullish than a failed breakdown, and that's what that was. It's not a huge pattern, so I don't want to put a heavy weighting on it, but you can see we're in an uptrend right now, a near-term uptrend in Treasury bonds since this point right here. In fact, we hit pretty much we had some good support down here, so that's a nice support level in Treasury bonds at 155ish level. I've mentioned that before, and there's your current uptrend right here. Series of higher lows and so far higher highs. Now we are coming up to resistance. I'm going to add a line right here. You always want to look at these previous reaction highs, so you have a couple of them right there, and that's where we're at now. You also have negative divergence, so I wouldn't be chasing Treasury bonds here. I wouldn't be buying them. Not anything really I care to short. I don't really care to take a lot of new positions really at this point, again with Apple and all these other companies coming out next week. But I will tell you, I'm going to go into, and I have mild short position now, and I will certainly look to increase that next week depending on what happens with those market leading FANG stocks. As I went over in the video yesterday, and I will cover next week's earnings. The majority of the stocks that are scheduled to report, including those leading FANG stocks, all have bearish technical postures and are not far away from key support levels, like Apple walking up that price channel. And if and when those sell signals are triggered, I think there'll be a pretty sharp rush for the exit. I'll try to get to that chart, and then we'll wrap this video up. Before I do that, I know all of you don't trade futures, so here's TLT, the Treasury Bond ETF. Kind of a busy looking chart here, but what stands out to me is we had a downtrend line that was pretty clear right here off the highs. We put in a divergent high back here. Again, a heck of a run up. We were very overbought, and Treasury bonds corrected and have been correcting for a while. It looks kind of like gold too. Remember, gold had that similar symmetrical triangle pattern like that, and then gold broke out and gold ran all the way up to the previous high on the daily chart. And so we do have a breakout above that trend line. We're at resistance. That's another reason right now it's not objective to add to treasuries. 141.70 is resistance, just as I showed you that the treasury bond futures were at resistance as well. But again, as I said, I wouldn't short treasury bonds. Based on the fact I'm leaning towards the correction finally starting next week, if not sooner. Maybe we'll see some nervousness and people start to take profits. Heck, if I had Apple right now, I wish I did. I was long earlier this year for a while there, but sold that way too early. But what I was getting at is I would certainly be taking some off the table before earnings after such a huge run up. And finally to that, let's just go through this real quick. I wanted to show you guys something here. I went over this the other day in one of the videos. I talked about the this indicator right here. Let's get rid of all the others. Let's just park these and then we'll wrap up on this. This line is a custom indicator I created that shows the percent of stocks that are trading above their 40, not the percentage, I'm sorry, each individual security. Whatever I load here, it will show you the percent that it is trading above its 40-week moving average. That's the red line here on QQQ. I'll turn that off, all the annotations. So there's your 40-week moving average. Does a great job at defining bull and bear markets. When you're trading above it, you're in a bullish trend. When you're trading below it, like these corrections here, it doesn't look like much, but that's that big drop back last quarter. There was your bear market or correction back in 2015, and you can see in a healthy trend the QQQ, and it works very well for a lot of tech stocks as well. So we're going to go over that real quick, and then I'll wrap the video up. So let me turn the annotations back on, and you can see that we are approaching the red line. Now I put this line, each security I have at a different level. This is sort of like your RSI, where red is overbought, green is oversold. That's where you want to be buying. This is where you want to be selling. But the line, the value is different on every security. Here it happens to be 1522, meaning 15% above the 40-week moving average. And you can see go back in time or screenshot the video. A lot of times when you get to that level, that's the end of the run, at least for the time being. So what I'm going to show you real quick here is some of the market-leading stocks. And this is a weekly chart. So what we're looking at on Apple is, let me see if I can give you a little cleaner board. Yeah, we'll do this. Apple, no, I got to go back to this one here. There it is. Apple's magic number. It's not as clear on Apple because you had some very big extremes back here. And Apple's been a heck of a growth stock. So early on in the early 2000s, you got some extreme levels, but in recent years, really, it's about that 37 level. It's not as well defined as some others. And what I'm getting at, you look at that, from that point, if you didn't correct right away, you really didn't go up much from there. You traded sideways for a while and maybe put in, divergent high, and then a big drop came. 45% drop after that one. This one right here, 26% drop, and we're coming up on that level now, but there's a few others. I'll just show you the fangs. That's Microsoft. You can see the lines there. And again, just put the crosshairs. Look what happened to price. Follow the price scale, or the price candlesticks after we hit those extremes. And you do the math. 25% drop. I happened to measure that one out. That was actually off the divergent high. And doesn't always happen. Another consideration is you see an extreme right here, and it didn't really lead to much of a drop. Well, Apple had just broken out. So in using analysis like this, I always look at not just, what happened each and every time we got there. That's one thing in itself. The other thing is, what was the stock doing at the time? Microsoft had just broken out right here of a multi-year, this was the top of that trading range, was a big level. That is huge resistance. That is a powerful multi-year breakout over a decade long of sideways trading under that 32-ish level. And so therefore that didn't trigger much of a correction. So you want to kind of learn to ignore certain sell signals like overbought, and in this case this one. But then once the trend started, the stock became a little overbought. It did. You can see here, didn't do much there. That was a huge run. That was the Trump pump. Market was very strong, but it did certainly come into play there. And there we are again. So I just want to point that out, that a lot of these stocks are reaching extremes on many different indicators. And just show you a few more here. There's Alphabet. I must not have put the lines up. I can do that for you right now. Put a horizontal line. And there it is. So you can see really I'm looking at where, where that level pretty much peaked in prior instances. Amazon. You know what I did actually, guys? Sorry, I was going through. I started to do this last night with the components of SPY. That's what it was, and some of these are in there. I think I have some other ones. Um, I'll have to update it. There it is. Some of these stocks I went through, like Visa and all these. So I just wanted to say it's the same common theme here. We're overbought not just on the RSI and other things like that, but a lot of those stocks are at those extremes where they're well above their 40-week moving average. And just like I was saying a minute ago on one of those securities, when you get far away from a trend line, there's usually a reversion to the mean. You come back and test that trend line. Here's Visa. That's what I expect to come back in. It's been a while. We've gotten pretty far away from that trend line, and we've gotten very far away, about 16% away from the 40-week moving average right here, that red line. So you turn everything off here, and you can see what happens. You get away from it. It's okay to trade above it, but when you get these extremes right there, that's usually when you get in a correction, and then you come back in, and every now and then you come back to test that level. And you want to know when you're in a bear market, when the majority of the stocks and the market are below this 40-week moving average by a good amount, that will most likely be a good sign that the primary trend has now changed to bearish. So at this point in time, I'm just looking for those stocks to come back and visit that 40-week moving average as well as the major indexes, and then from there we'll see how things look at the time to see if it looks like we're going to get a solid breakdown below there. Okay, we'll wrap it up here, and anything else that stands out, I'll get it out to you guys. This has been Randy Finney with the Right Side of the Chart. I hope you enjoyed it.